So, liquid investments offer you the opportunity to build wealth while keeping your funds easily accessible. Are you taking advantage of liquid investments? Hey everyone, my name is Bola Shokumbi. I'm the founder and CEO of Clever Girl Finance. I'm also the author of the Clever Girl Finance book series and my most recent book, Choosing to Prosper. Welcome to Clever Girl Finance TV. So in today's video, we're going to talk about liquid investments, what they are, and why they're important to be maintained as part of your overall financial strategy. But first up, what are liquid investments? So liquid investments are investments that can easily be converted to cash. This means you can get access to your funds as quickly as possible, and converting your funds to cash should not be difficult or complicated. And liquid investments are best for short-term purposes. For example, a place to store your emergency fund, to save for a short-term goal like a vacation, a business, or even buying a house. You can also use liquid investments to save for larger purchases that are going to take you a bit of time. One thing to keep in mind when it comes to liquid investments is that you are likely going to get a lower return than if you invest your money in something riskier. And so you don't want to have all your money in liquid investments because of the lower rate of return. But with liquid investments, like I mentioned earlier, you have that peace of mind knowing that you can easily access your funds when you need it without having your money or your principal balance being affected by, for example, market volatility. So while liquid investments are important, you also want to consider illiquid investments in your portfolio, for example, real estate. That said, let's look at different types of liquid investments. Number one, interest-bearing checking accounts. So we all have checking accounts and they're a great way to keep your money liquid. As some checking accounts even have the option of interest where you can allow the money you put in those checking accounts to grow with the interest that is offered to you. Essentially, checking accounts is one way to keep your liquid investment as liquid as possible. Number two, high yield savings accounts. These are another form of very, very liquid investments. This is another place that you can put your money, get growth from interest, especially if it's a high yield savings account, and then access your money when you need it. Number three, money market accounts. So a money market account gives you access to check writing, privileges, and use of an ATM. And because money market accounts typically offer higher interest rates than savings accounts, you have the opportunity to grow your money more while still having access to your money. Number four, a no penalty certificate of deposit. So certificate of deposits, also known as CDs, are typically known to be liquid investments. However, you have to lock your funds in for a specific period of time up until the maturity date in order to get a specific interest rate. However, no penalty CDs allow you to use a CD as a liquid investment because there is no penalty associated if you need to take your money out of that CD earlier. It might mean slightly lower interest rates, but it is one way to have access to your money as a liquid investment when you need it. Number five, stocks. So stocks can be liquidated very easily. However, they are not an asset that you really want to look at as something to leverage when you need liquid investments, simply because you cannot predict the market, you can't predict the stock market, and because of market volatility. However, because they can be liquidated fairly easily, they are considered a form of liquid investments, and you want to leverage them for long-term purposes and as a way to diversify your portfolio. By the way, if you're enjoying this video, I'd love for you to hit the like button, subscribe to this channel, tell your best girlfriends about Clever Girl Finance, and stop by our website, clevergirlfinance.com. We have over 30 plus completely free courses, and our blog gets updated every single day. You can also tune into the Clever Girls Know podcast everywhere you listen to your podcast episodes. Okay, let's get back to these liquid investments. Number six, bonds. So when you buy a bond, you expect to earn interest on your bond up until the maturity date. And essentially a bond is an IOU. It's a loan that you give to the government or a corporation when they're trying to raise money. And bonds can serve as liquid investments because you can always sell a bond to tap into your money if you need it. Number seven, ETFs. So ETFs are also known as exchange traded funds. And unlike stocks that invest in a single company, they allow you to diversify your investments into multiple companies or an index of companies. Again, similar to stocks, ETFs are not something that you want to rely on as your sole liquid investment. Yes, those ETFs can be easily converted to cash within a day or so. However, you don't want to have to rely on them as your sole liquid investment because of market volatility and because you cannot predict the market. And so the last thing you want to have to do is to sell your ETFs or your stocks when the market is down and lose principal, part of your principal balance. So it's a good idea to have ETFs and stocks as a way to have access to liquid investments if you absolutely need them. But these two particular investments, ETFs, investing in funds, investing in stocks, should be used for long-term purposes and to diversify your portfolio. And if absolutely necessary, you can easily convert them to cash and leverage them as a liquid investment. And number 8, cash. Cash is the most liquid of all liquid investments. This is because once you have it in hand, you can use it to make purchases, you can use it to make payments. And although cash in itself, in its plain form, is not necessarily an investment, right? You have to put the cash towards an investment, towards buying an asset for it to be an investment. It is on this liquid investment list because it's the most accessible way to make a payment, to cover a bill. So you always want to have some form of cash accessible, and you can leverage your other liquid investments to have your cash accessible. So for example, your checking account and your high interest savings account. So liquid investments are a useful tool. It is really important that we all have access to liquid investments for different things, for emergency savings, for sinking funds, to save for short-term goals, buying a home, planning a wedding, expanding your family. There are many reasons why we need to have access to liquid investments that are short-term versus having to tap into longer-term, more difficult to liquidate investments, for example, real estate. So we all want to have a certain amount of liquid investments accessible to us as a part of diversifying our financial portfolios. You can learn more about wealth building and investing in our free course that is going to be linked in the description below on Clever Girl Finance. We have a 7-course investing bundle. It is completely free and it teaches you all about investments and the different type of investments you should consider to expand and diversify your own portfolio. I hope you've enjoyed watching this video. If you have, please hit the like button, subscribe to this channel, tell your best girlfriends about Clever Girl Finance, and stop by our website at clevergirlfinance.com. Check out our free courses and our blog that gets updated every single day. Thanks for tuning in, and I will talk to you next time.